Hi, how's everybody doing? This is Mr. and Mrs. Silver Fox Forex back with another training video. So now we're going to go to lesson 2, or as I like to call, lesson number 8, understanding price movement. Price movement, a lot of traders will use to understand which way a stock or a pair is going to move based on the levels of price action that it hits or if it's going to retest. So without further ado, we're going to go to the next module. Tell me what you guys think. Let me know if this is helpful. Let me know if this is going to give you a good general understanding of what it is that you're looking at and what these markets are doing.
Applying support and resistance in candlesticks. Understanding price movements. Being able to gauge the strengths of an SR level is basic for predicting price movements. The stronger an SR level is, the more likely it is that price will halt or reverse at that level. If price makes a sustained break beyond that SR level, it's a signal that the trend is strong and the price will probably continue to the next SR level. To gauge the strength of a given SR level and thus predict whether or not the price is likely to break through, it is important to look at how well the SR level fulfills the I-rate criteria. Indicators. The number and quality of SR technical indicators that converge on a given price level. The more indicators at one price level at the same time, the stronger the SR level. We'll learn about these indicators in coming lessons. For now, just know that these labeled lines in the chart below are SR indicators. Each alone can provide a degree of SR. The more that meet at a given price area on the chart, the stronger the SR. Round number. Our brains remember round numbers more easily and assign more importance to them. That's why the EUR/USD is stronger SR at 1.3000 than at 1.2982. That is also why a retailer will price an item at $2.99, which he knows feels cheaper than $3. When analysts refer to a given stock index level as psychologically important, they often mean it's a big round number. For example, it's a big deal when the S&P 500 breaks past 1,300, 1,400, 1,500, etc. Age. The older a zone is, the more likely it is to hold as SR. For example, an SR level is much more significant if it hasn't been hit in many years or months than one that hasn't been reached in days or weeks. Tested. The more times an SR level has been tested but not decisively broken, that is, not breached for more than a few occasional candles, the stronger it is because it's proven its strength. For example, note below how often the 1.3775 area is tested as resistance and holds firm. There is no doubt that part of the reason is not only it's a round number, it's also supported by the presence of another important SR indicator in the same level, the 61.8% Fibonacci retracement line in yellow.
Another quick video. I hope this was helpful for you guys to understand support and resistance when a certain support resistance has not been broken in quite some time. So that's why a lot of traders, professional traders, good traders, will go to a monthly time frame and it will break it all the way down. And what they're doing is they're drawing these trend lines, they're drawing these support and resistance levels to make sure it's not being broken and it's only being tested. As they break down the smaller time frames, it gives them information that they need to stay in a trade longer, or which way the trade is going to go, or to have that sniper entry and ride that trade down for the next week because they know it's going to go down. They've got validations on their key levels saying, hey, this thing's going to keep dropping or it's going to keep going up. So that's why it's very, very, very important to make sure that you understand price action. Also, if a zone's been tested and if that support and resistance has been broken. I hope this video was helpful for you guys. We're going to move on to the next module. Take care and happy trading.